Hello and welcome to this special report here at S&amp.com. We'll be taking a look at how big tech companies have been performing lately, specifically how some of the Magnificent Seven are lagging behind the others, and what this means for stock markets. I'm Maria Pachordes, and joining me is market analyst Cristina Parfenidu. So Cristina, among the Magnificent Seven, which companies are falling behind in AI? And what should investors look out for?
Hi, Maria, and thank you for having me. As you know, the Magnificent Seven refers to a group of major tech companies whose stock performance has significantly been outpacing, the S&P 500 index, especially during the previous 2 years. However, we are now seeing a shift. Companies like Tesla and Alphabet, Google's parent, appear to be losing momentum compared to their peers like Nvidia and Microsoft, which rallied by more than 100% to record highs in stock markets during the second quarter. On the other hand, let's say Tesla and Alphabet delivered only half of those gains and even less. So a big reason is their slower progress in the AI race, as you have mentioned, which is increasingly becoming the core driver of growth across global tech. Now, while Tesla and Alphabet are, of course, investing heavily in AI, their products and applications differ from what Nvidia offers. Progress has been slower as well. And on top of that, US import tariffs are creating additional pressure, especially on Tesla, which also lost access to EV tech tax credits. So, moreover, Elon Musk's growing focus on politics also raises concerns about how involved he is in Tesla's day-to-day leadership. Now, as for Alphabet, the company is facing challenges in maintaining its dominance. Its traditional Google search tool is losing popularity, especially among young population. Users prefer faster AI tools like ChatGPT for expert answers. And more recently, the US Department of Justice has even pressured Alphabet to divest part of its business, like selling its Chrome tool due to antitrust concerns. So that's another headache for the company. Probably tonight's earnings reports could offer more clarity on how those companies are really performing in the AI space. Of course, expectations are not high. Tesla is likely to report a year-on-year decline in both revenue and earnings per share. Alphabet may post modest double-digit growth. But beyond those numbers, what investors should watch is how AI-related spending is translating into revenue. If Tesla and Alphabet can show that their AI initiatives like robotaxis have real growth potential despite mixed reviews, then they may still have a chance to close the gap with AI peers.
So do you think big tech companies will stay united in the AI race, or is a split inevitable?
I think that really depends on how well they manage their costs and strategic focus. As I mentioned earlier, the AI race has exposed differences in product appeal. For example, Nvidia semiconductors are high in demand. Nvidia has even managed to adjust its chips to sell more in China. So that gives a clear edge to Nvidia. In contrast, other companies like Alphabet are trying to adapt. Alphabet has managed to reduce some of risks by turning rivals such as OpenAI into cloud clients, and its acquisitions of AI-related startups are also helping accelerate its innovation. However, more action is needed by those companies. A cost-effective strategy will be crucial for them to focus their resources on high-growth areas. In this regard, several of the Magnificent Seven companies, including Alphabet, have already started to cut costs by reducing headcounts and offering voluntary layoffs in less profitable provisions during the second quarter. So perhaps that's something to keep a close eye on during their earnings that come out today after the market close. And any further updates on workforce reductions will be important to watch, especially with the upcoming US non-farm payrolls report. Now, that said, it's not all dark on the AI front for both Alphabet and Tesla. They own major data infrastructure that supports AI growth. Tesla is expanding beyond electric vehicles into AI-driven services like its experimental smart dining center. Alphabet is producing its own chips and has a relatively low valuation compared to Tesla, which is probably not really reflecting its full potential on the AI front. So yes, they still have a chance to catch up, but it will take focus, specialization, and discipline execution. As the saying goes, not everyone can be great at everything. The key is knowing where to lead and where to scale back.
Christina, thanks so much. And thanks for joining us for this special report here at XM.com.